And welcome to the VSA Capital Tech and Transitional Energy podcast. It's Thursday, the 23rd of September, and it appears that VSA is definitely in the news today, Phil. I think I've been on Radio 5, Radio 4. It appears that my picture is now all over the BBC News online news channel discussing flexible working and working from home. Don't know if you've seen any of that, Phil?
Yes, I have, Andrew.
Don't believe everything you read in the press, mind. But it's all good PR, isn't it? So here we are, Radio VSA, and it's tech and transitional energy. Don't worry, it's fine, Phil. I understand how you work entirely.
Thank you very much, Andrew. And I'm also delighted to say I'm in the office today. So.
You're in the office, and yeah, I'm not a bad boss. I'm not a dictator, and I'm not really a dinosaur, am I?
Not at all. Not at all. Oh,
anyway, let's kick off a little bit on a fairly sort of general point. But I noticed, obviously, this week a lot of the talk has been about the energy crunch and energy firms collapsing left, right, and centre, and the gas price going ballistic. And of course, you know, Boris Johnson is over in the US, standing up in the UN, talking about Kermit the Frog. Don't know if you saw that. He actually was trying to explain to global leaders about Kermit the Frog, who said he thought it was difficult being green, and that Boris Johnson said that's not true. It's easy to be green. I mean, well, that's one way of describing everything, using Kermit the Frog. Anyway, the point is really that there is this huge energy situation at the moment in the UK. And, you know, everybody's saying, look, you know, there's not enough energy. We've shut all the coal-fired power stations. The wind isn't blowing. The interconnector with France, who are a bit unhappy with us anyway, isn't working. Maybe they blew it up. Who knows? But no one's coming up with a solution. And yet we say this every week. The solution is pretty simple. You need energy storage. And actually, you know, we talk about certain parts of energy storage. You need the whole damn lot. You need hydrogen energy storage. You need compressed air energy storage. You need hydroelectric energy storage. You need lithium batteries. You need vanadium batteries. We need all of this to make this whole SWB, which is solar wind batteries, new economy to work. And the sooner that people realize this, the sooner we can get on and do it and get it in place and solve our energy crisis. Wouldn't you agree, Phil?
I agree wholeheartedly with that. And I think that this, the current crisis has really brought everything to the fore. So very painful as it will be for, I'm sure, for many consumers, hopefully it sets a newer direction and, a newer impetus for the years going ahead on what is done in terms of energy supply.
Well, all I can say is Boris Johnson, or anybody in the UK government, if you're listening, which is quite unusual for a politician, I accept, come to us. We have the answer. Actually, also, whilst just talking about energy storage, I did notice that at the start of this week, Gore Street Energy raised about £70 million to acquire another 57 megawatts of energy storage based in Leicester. And also Gresham House Energy Storage Fund, they had their interims. And you know, they're very much doing what they're saying they do on the tin. You get a sort of a 10% return per annum, and it will go on ad infinitum to a certain extent. You know, for a pension fund, that's great. So we've got these energy storage funds doing exactly as they should. The one issue with them, of course, at the moment, they're putting all their money into lithium ion energy storage, and that's going to be a bit of a problem because we all know that lithium ion, unfortunately, doesn't last very long. And it's probably okay in the UK climate because the UK climate is, frankly, pretty cold and wet most of the time. But we know that in places like Australia and California, they're all blowing up. And there's a bit of a problem when your energy storage blows up. It's not much use. Anyway, there's a couple of points on that. Anything you'd like to add on that, Phil?
Well, obviously, one of the points we get to all the time is clients of ours, Infinity Energy is, it's not terms of type, it's longer term storage and for utilities. So it's a different type of storage technology. And I think what we will see happen is, got to remember as well, I was just reading an article on BMW and its ordering of batteries. And this was a few weeks ago, and they've ordered something like 20 billion euros of batteries they're looking to order. Is that there are other factors, looking at different battery technologies, is the demand that there's going to be on lithium ion. You're going to need alternative types of storage, and it's a key part of the grid. But I guess, as I say to you, for things to really, really, really change, sometimes you need a big trigger event. And my word, we have one in the UK. So and hopefully it will really accelerate progress.
Well, I hope you're right. And I hope it is a trigger event and that people do wake up to what is required. And look, let's be honest, how could we do a podcast and not mention Invinity Energy Systems? It's almost de facto that we will, isn't it?
Right. Anyway, so
although actually, I'll tell you, moving on slightly, because you mentioned there about lithium and the huge growth in it. More and more people are just starting to talk about lithium recycling, which is very difficult. There's very few people actually in the world that do it. But the one that is out there, it did a reverse into a US SPAC. Lithium Cycle. It's a Canadian company actually, but I can tell you its major shareholder actually is British, based just off Bond Street, a family office, very smart family office as well. And that stock has been ticking up just recently. When it did the SPAC deal, it came off. But there are some interesting businesses starting to crop up involved in either lithium recycling or trying to create a lithium battery that is better designed so that it can be recycled. And we do actually have in Birmingham a company that is doing that, and I think we need to go and visit them, Phil.
I think that's a fine suggestion, and we hope it's what an area, and there aren't many involved in it, as you say, and globally, and it is going to be a real problem. Going forward, the batteries, as you know, only have a certain amount of life, so there's a definite need for it, an investment in that area. Yeah.
And the other one, of course, that we've seen this week that everyone's been talking about is this lack of CO2. I'm not sure it's really tech or transitional energy, but it's become a huge issue, hasn't it? I mean, I'll tell you what, they've all been focused on the food industry, I think it was, and fertilizers and things like that. I mean, they all missed the key use of CO2 as far as I could see, which was really starting to worry me, and that's lager. I mean, you cannot have a pint of lager without CO2, can you?
That or tonic water.
Yeah.
Which is very difficult, which I'm discovering is very difficult to make at home. So if anyone has any suggestions, but it's all these key elements of the supply chain that we don't realise are there until something goes completely wrong. And there's a supply chain that are in the hands of very few companies.
Well, the supply chain, and of course we're seeing on an almost daily basis now the geopolitical situation between the West and China become, I think it'd be fair to say, trickier and trickier. One has to be very careful what one says, but I think that certainly in transitional energy, China has started on that route way before anybody else, and is much further advanced. And the West needs to catch up. And, again, it comes down to, I think for some of these things, we've got some great companies, but we do need actually governments to, help and to sort of say, yeah, look, we want to get these things done. I know through the British Business Bank, they're doing some quite interesting deals where you can get technology businesses and that sort of thing, get very good funding with a sort of very good sort of leverage as well to investors. But we do need more, I think, support from, central governments, etc., to say, look, go for these things, get them out there, roll them out quick. Let's catch up.
Well, China has its 5-year plans that they do, central government, central planning?
Yeah, it has a 5-year plan every 5 years. So,
we have 5 years, 5-year governments here.
Yeah, if you're lucky. They don't always last 5 years.
That's right. So there's not the... we don't seem to have, sometimes we just lack that forward vision to say this is where we want to be in 10 years time. And in terms, but you've got to say the UK did take a lead in terms of changing its energy mix. We had the dash, remember the dash for gas in the 1990s, where, you know, and I remember like all the central heating, your gas central heating coming in the molding off, in the sort of, you know, it was late 70s and 80s, I think, they converted over all the central heating to the gas, and then with gas power generation, and after the miners' strike, the move towards wholesale over to gas. And then we closed down the coal-fired power stations to try and meet, you know, get ahead on emissions requirements. So in some ways, we acted with a lot of foresight, but unfortunately, it's left us with a dependency.
Well, particularly some of our nuclear power stations, well, now so old and creaky, you can't rely on them either. So anyway, probably enough on that. But talking of dashing and building things up fast, we did both listen to an interesting webinar from eSmart Networks, which is part of Nexus Infrastructure, which is a stock, again, we've talked a lot about. You know, what is interesting, I think, there is, you know, the addressable market that they're looking at is, you know, they think approaching £10 billion. And this division of Nexus Infrastructure is growing incredibly fast. And is incredibly important, to be honest. I mean, they talked about having visibility over a pipeline of more than 400 million, which is extraordinary when you think it's, you know, it's a business that's literally started from scratch only a few years ago. What do you think of the presentation, Phil?
I thought the deck was. I thought what they presented was very, very informative, and especially if you were looking at the business for the first time. And it gave. I was quite, I think, like you, quite taken with the scale of the market opportunity within charging infrastructure, within the UK. I mean, this was just looking at the UK for EV charging infrastructure, and particularly eye-catching as well is some of the work that they're doing. I thought, you know, with people like Amazon and Amazon's, you know, plans for electrification of delivery fleets, and we're seeing more and more of that businesses. Because I mean, e-commerce is growing like you know, is very, very strongly in the UK. It all takes delivery, it all takes vans, and so electrification across the logistics businesses is a cracking opportunity.
So. The trouble with the stock really is it's I mean, it's a relatively small company. It's got a very tight shareholder base. Liquidity isn't great at the moment. It needs a force of might to get it going, I think. But it's been a good performer. It's slowly creeping up. You know, as we're very clear, we like it. We think it's worth an awful lot more than it currently is in the market. But it's one of those ones that needs to get out there and shout a little bit, I think.
Yeah, absolutely. Yes, good story.
Yeah, no, it is. So what else have you been looking at, Phil?
Well, I'll tell you what I did look at very quickly is UK Grid Watch just now, and you'll be pleased to know that generation in the UK is 30% gas and 30% wind. So the wind is blowing again. Hurrah. So maybe that gives some short-term relief. There was news out this week that the UK technology sector had raised £13.5 billion in the first 6 months of this year, 3 times the same amount last year. And there's some big transactions in there, including Revolut and Cinch. But there were 1,400 UK tech companies financed. So there's a lot of opportunity in technology, and many more of them look at the public markets as well as the private markets. And of course, we support both areas of investment, private and public investment. But that's super to see. And I saw another stat to say that on tech now, London is, and in fact, the UK is second behind Silicon Valley. But other stats say, it's quite something, and why we're very keen to, talk about the area and be involved in it.
Yeah, no, I mean, I did notice that in the press, actually. They're really talking it up. And I mean, again, we've had some really big floats, what have we had? Alpha Wave, Wise, Dark Trace, all these sort of things, haven't we? As well as quite a lot of these sort of smaller ones that are coming along. And they're all doing pretty well. I mean, I think it's and of course, it goes back to what I was saying earlier, also about, what the British Business Bank is trying to do to help fund some of these, firms, be it through structures with venture capital firms. It is really interesting. Again, it's probably more than we need to talk about here, but if anyone wants to talk about those sort of things, then, do give us a shout.
Yeah.
I think, again, one of the interesting things we've had, as you say, a lot of floats of technology companies and that sort of thing. And, we've commented on this podcast quite a lot about the valuations. And I think the one bit that still, sits in my mind a little bit is we're still not necessarily brilliant at getting the right value at IPO for some of these things. And it's really important that you get a good aftermarket when you IPO a company, and that everyone, a very well-known client who I talk to quite a lot, he always says, Andrew, everyone's got to go home with a party balloon. And I think that's true. You know, you need to make sure that all your investors go home with a party balloon, that you have a good aftermarket that carries on. It's quite interesting how often some of these stocks, you know, they come along, fly off the IPO, everyone's excited, and then they just drift away, and the price comes down and down and down. And you need to try and avoid that if possible. Not always possible, but if possible.
Yeah, and that's why, you know, news flow, certainly for quoted businesses, is very, very, very important. And
actually, on that, another point on that, I hate, not that I hate, actually, that's not true at all. But I noticed that there's another broker is bringing a company, Super Dielectrics, hopefully to the market fairly soon. Now they're involved in supercapacitors, and I think that supercapacitors it's a bit like solid state batteries in that it's not probably talked enough about, and probably not enough people playing in the space, because both solid state and supercapacitors have the possibility of really advancing forward the whole issues of battery powered EVs and that sort of thing, and how energy is stored quickly and that sort of stuff, and in small spaces. I don't know if you have a view on that, Phil.
Well, the supercaps are that they're key components within, they can be within electric vehicles in terms of providing short-term storage and boost power. I mean, literally, a capacitor is an electronic storage device, and a supercapacitor stores more than the average capacitor you'll find in your iPhone, and they can boost the power. And look, it's nice to see tech in this area coming to the public markets, and the more the better, I say, because, you know, in the UK we've got all of this expertise in advanced automotive technologies. We don't necessarily have the scale of automotive manufacturing that Germany has, but remember, most of Formula One is based here for a reason, and that's our engineering expertise. And anything, you know, in terms of EV technology and engineering that gets in front of investors to my mind, is a very good thing, and to be encouraged.
I totally agree with that. Now, have we had any results you want to comment on this last week, Phil?
We have had a number of there's been a few interim results. One that we've discussed before, which is Learning Technologies, Andrew. It's LTG as a ticket, and it's now 1.7 billion market cap. And this is one where you always give me a good kicking and say, Phil, you could have told me about this years ago. Years ago, Andrew. But this was it listed originally at a valuation of tens of millions, and it's been a buy and build. And this is why the public markets can be very powerful, is that you can once you are listed, you can raise money very quickly to acquire, and that's what they've done. And what the learning technologies do, it's workplace digital learning and talent management platforms for corporations. They get involved in consultancy as well, but this whole area is a big growth area as businesses, you know, want to grow, want to retain talent, want to train them up, increase their knowledge. So that was interim results, and they had. It was interesting this because they acquired, they've obviously got acquisitive growth. So the top line sales grew by 29%, but the organic growth was 7%. So this was interims to June versus June of last year. The software platform's organic growth was 5%. I'm just looking across this. So I guess the key takeaway from me on this one is that there's organic growth there, but they make really good. This makes a really good EBIT margin, and they made an EBIT margin of about 27%. And they've also announced in July they're going to make a very large acquisition, a company called GP Strategies, for $394 million. So you can see here that they really are, and this is obviously an international business now, but they created an international tech company, and over a relatively short amount of time on the UK stock markets, and from something that started quite small. So it's just I do think Learning Technologies is a super example of what can be done. So that was that was interesting to see. Something a company you might not have come across before is called Kooth. The ticker is KOO, so 129 million market cap. And they've just had interims. And this is a company that IPO'd in September last 2020, raised £26 million. Market cap at the time of admission was 66 million, so it's just doubled since then. What does it do? It's a mental health software company, and they, NHS waiting list for mental health now apparently it's 1.8 million people on waiting lists for mental health treatment, but these is personalized digital mental health care. Now, I've not looked at the platform necessarily and what this does, but it certainly looks to be it's in an interesting area where there is a requirement for help, and their revenues, their interim revenues, were up 35%, which is and it seems to be all organic growth. So that's quite eye-catching. Also, they got net cash because they did the IPO. And they saw an increase in their recurring revenue. So their interim revenues were, they were £8 million. Well, the recurring revenue was up 23% of the total revenue. So
yeah, it's gone from loss to profit, hasn't it? But only just profit. But I'll tell you what, it has been a great performer. I mean, year to date, it's up 58%. So it's had a pretty good performance this year.
Yeah. So it's but as I say, it's certainly serving a need, and a need that's growing, and it was that really caught my eye. Another one is Strix. I don't know if you've come across Strix before. The ticker is KETL, as in kettle. The market cap £740 million. They had interims. What does Strix do? It's the global leader in design, manufacture, and supply of kettle safety controls and other components, including water heating devices, temperature control, steam management, and water filtration. In fact, I think I've got one of their Aqua Optimas, their filtration brand. I've got one of those at home. Anyway, Strix, who makes these components, had their sales, interim sales, were up by 25%. And a lot of that dropped through to gross profits, which was quite interesting. So their gross profits were up 23%. And operating profits were up by 13%. But just looking at this is quite a surprisingly high margin business. So the revenue was 55 million. The operating profit was 14 million. And that, this is kettle components. So they've obviously got something that's quite special in terms of what they provide to generate that sort of, it's a 27% operating margin.
Next time I make a cup of coffee, I will have a look at the kettle and think differently. That stock's up 60% this year as well.
Yeah, I've never really looked at this one before.
I saw Adept Technology had an AGM update this morning, which was pretty good. I mean, that's still in line with expectations, but they said they had a very positive start to the year. So there's another one that seems to be doing quite well. I'd say in general, the tech companies are actually performing pretty well, aren't they?
They're starting to recover. I mean, did you see Quixent? So QXT is the ticker, 120 million market cap, and they design, and I do know this company well. They design computer systems that go into gaming machines and also screen technology. And if you use gaming machines or you're in casinos, that you will see there's very, very advanced games that can change the games because all the machines have computers in them that enables that to happen. And they, obviously casinos and everything have been shut, due to lockdown. But they come out with their interims, and clearly business, people are going back and using these things, and their business is recovering quite strongly. And they had their interim sales are up by 25%, and their EBITDA was up by 17%. So 17 million of EBITDA on revenue of 55 million. So a good, decent EBITDA margin, and a strong operating profit. But there's a business that's starting to recover well as well.
And another one that had results today, actually, and we tend to count it a little bit in technology, but is the Aquis exchange. We count it because it's sort of a technologically led stock exchange alongside the London Stock Exchange. It's the competitor. And they had some pretty good interims today, and they're now doing 6.2% of all the trade across Europe, which does make them one of the biggest exchanges in Europe. And so people shouldn't forget that. You're going to hear more and more about Aquis as we go forward.
There we go. Yeah.
Any other results you wanted to comment upon?
Yeah, I guess the final one from me is one I haven't come across before, is Attract Group. And that's Attract spelled with 2 T's. Ticket is ATQT. The market cap is 80 million. And this is an e-commerce technology company. And I think I've come across, I'll tell you what this is. I think the foundation of this was a company called Fredhopper Software that used to be within SDL. But it's enhanced customer journey optimization. Now, what does that mean? It means when you are on a website, it's actually looking at behavior on a website and making sure that things appear as you're searching through the website and reacting to your needs. I mean, a classic simple example of this is like Amazon. And if you search on welly boots, it will say customers also purchased or customers also looked at. So it's all tailoring your e-commerce journey across.
It's a massive business, isn't it? This whole messing around with data and what people look at. And sometimes I'm amazed, you're looking at something and it goes and tells you where to find something. That's funny. I was thinking of buying that. And then you realize that actually it's because someone's realized that you looked at a website, the cookies had gone in or whatever. I always thought cookies were biscuits you ate, but apparently there's some technological thing. I can't decide whether I like it or not, though, because sometimes it also drives me insane. I feel I'm being spied on the whole time.
Oh, yeah, indeed. But sometimes it can be very, very helpful as well. So there's a quid pro quo.
Yeah, I think that's probably right. So it's a balance, isn't it?
Yeah, definitely. I think sometimes I would rather have it because it does give you lots of choices. But look, at the end of the day, a website needs to be tailored so it maximizes business. And this is what their software is helping companies to do. So
the other one, actually, I should just comment on. So there was another set of figures I wanted to just quickly mention is Warpaint. I don't know if you look at that one at all, but they're obviously basically it's what's their brand? They've got one really well-known brand. But there's a lot of female beauty products, lipstick and that sort of stuff. Sorry, the brand slipped my mind. But they're doing really well as well, actually, because the sales of these sort of what I describe as low-price beauty brands are really going well. But they're also pushing strongly into China, aren't they?
Yes, they are, and onto the e-commerce platforms there. Yep.
And that's an area that we obviously watch a lot with our client Samarkand. And it is, whatever we think about China, there's still such a huge, you look at the UK and you've got a population of, 50 million or something. So you go to China and you put a naught on the end, almost put another naught on the end. Not quite, but, it's just vast. And therefore, it is, if you can get it right, it's such a massive market. But yeah, Warpaint seems to be doing well.
Yeah. And yes, going to the largest global e-commerce market. And it really is by a factor. But what a super space! A super space. E-commerce markets and ever growing. So one that we look at closely.
Yep. So maybe just to wrap it up, we are now we're well into September. We've seen quite a lot of IPOs and things coming on. We've seen quite a few M&As as well. Just yesterday we had First Group and Stagecoach getting together. Then we had a bid for Ladbrokes. I think we're going to see a lot more M&A as we go through the autumn. Often in October, the markets have a little bit of a wobble. Often it's because we have a hurricane comes through, and at the same time the market crashes. A lot of market crashes are taking place then. The market is a little bit nervous. The VIX index has gone up. It was sitting at about 25 the other day. It's come back a little bit. Are we about to have another little bit of a wobble of the market during the autumn? I hope not. Clearly the Evergrande situation in China spooked the markets a little bit, and we'll always keep an eye on interest rates in case there's a sign that they may start to go up, which will obviously spook the market. But I sort of feel I wouldn't say I'm in a rampantly bullish mood for the market, but I think we're probably all right. It seems to still be a reasonable amount of cash out there. I think there's still money to be made, and quite a lot of valuations did actually come back quite a long way over the summer to put stock prices back at a level that start to look attractive again. Would you agree with that?
Yeah, I do. And Behind it, though, is growth and the pace of growth. And this is why we're talking about companies' results and seeing how they're recovering. Post-pandemic's a tempting fate, but how they are just recovering as we come through things. And so that's why we're talking about company results, looking at the growth numbers, because at the end of the day, it's those earnings numbers or growth rates on revenues, whatever, that help to drive valuations.
You're spot on. The fundamentals always catch up in the end. On that note, Phil, we talk for 30 minutes, and that's probably enough. I think probably enough of us two droning on. But as I always say at the end of this, if people have got anything you want us to discuss, let us know. If you disagree with anything we say, let us know. It's always far more interesting to hear about disagreements than agreements in many ways. And always never believe everything you read in the press or hear on the radio or on podcasts completely, because there's often a reason for it. Anyway, on that note, very good, Phil. We'll speak again next week.
I will do, Andrew, and look forward to it.